career in venture. So your first job is at Tomorrow Ventures, and then obviously you have work at SoftBank and Sorrow Funds, and like that's a hedge fund. But now you're a co-founder of Mangusta Capital. Why don't we start with like what are some core lessons that you learned early on in your career that you kind of took into who you are today?
Yeah, absolutely. Happy to start with that. First of all, thank you for having me on. I see your stream pretty often on LinkedIn, so it's a pleasure to finally be on the show and excited to meet in person as well soon one day. I think just in terms of my quick background, before I kind of jump into it, I'm the managing partner for a fund called Mangusta, means mongoose in
Mhm.
Italian. We are backed by the largest Italian family office, and we focus on AI applications, usually pretty early stage. I would say seed stage is our sweet spot. And yeah, before this, as you mentioned, had a lot of different roles. So spent a lot of time at SoftBank for most of my career, but I did do a lot within investment. I started out my career in investment banking, did some VC, worked at a hedge fund, worked in private equity as well. I worked at Apollo. And I
Mhm.
think I have a very unique perspective when it comes to, I would say, VC, because I come from a little bit more of a later stage background where I think most VCs, especially on the early stage side, they may have come from an operator background. They started their own company or part of a startup, or perhaps they've worked in early stage VC for their entire career, or they had a lot of career changes. I've seen a lot of
Mhm.
people do interesting things to get to early stage VC. But like I come from a more traditional kind of mature per se, like finance and investing background. So I actually know like cash flow. I've run a lot of, Excel models before when we did leverage buyouts. And so for me, like I do care quite a lot about unit economics. I do care about valuation, which, some of the early stage VCs may not care too much about. And I try to be relatively disciplined when it comes to
Mhm.
underwriting investments and return scenarios, which is something that I think is quite unique, and I do take with me from earlier in my career to where I am today. Because ultimately, at the end of the day, like even if you're a VC, like the goal is you probably have to take a company public or go through M&A. And when you're in a later stage, like how do people value businesses and really what are the fundamentals of business? It's essentially like, cash flows and profitability and EBITDA,
Mhm.
for, many of these technology businesses. So being able to really work with that and speak that language is important.
For sure. I wonder, so like when you were in investment banking, like and like as you mentioned, like EBITDA and like everything, like all the financial benchmark really matters. But since I feel like we're thinking about like um maybe we could start with like your top investments. So like obviously you have invested in some like really interesting company like XAI or Wiz or Shipbob, like and then maybe we or Flexport. So like so those are like some really well-known brand. I guess like how do you think about sourcing and winning? Because I think like you could invest in so many things, but like I feel like those logos are like not very easy to like get in.
Mhm.
Maybe we could start with like winning the deals and then we can talk about sourcing right now.
Yeah, yeah, absolutely. And I would also differentiate a little bit between early stage VC versus like growth stage,
Mhm,
because, frankly, at SoftBank,
mhm,
it's a well, first of all, for SoftBank, it's a place where you have the email, you reach out to anyone, most
mhm,
founders are going to talk to you, right? There's
mhm,
very few places which would kind of turn down a conversation with SoftBank, because it's like
mhm,
you always there's this allure of Masa. He writes big
mhm,
checks, he'll help you take over the world.
mhm,
And so SoftBank is a very unique place in and of itself, but also broadly for growth investing. I think we're now at a stage where many of the large growth funds, founders, when they get to that unicorn plus stage, they'll try to talk to all of them. So it feels a
mhm,
little bit more like a banked process in many ways, where they're, engaging with everyone in the market, because there's probably, 10, 20, maybe 30 like large growth funds out there that you probably want to explore options with. And then
mhm,
after that, you pick the best option, you pick the best offer that you have on the table, right?
mhm,
So I think growth, in some ways, the sourcing is actually quite straightforward, which is you
mhm,
come up with your list of whatever is unicorn companies
mhm,
plus in whatever sector or stage you want to look at, and then you kind of go for it, right? You find a
mhm,
way to get connected. I think earlier stage sourcing is very different, right? You're really focused on um, what proprietary network or unique sourcing kind of advantages do you have where you're going to find things that maybe other people don't, or you find things earlier than people do. So I think for us, it's both of those, right?
Mhm,
I would say my deal flow and my pipeline comes half and half between inbound versus outbound. So
mhm,
inbound is a lot of referrals, which is probably what a lot of folks on your podcast will probably talk about, is like the
mhm,
network that we've built over the last 10, 15, whatever plus years. A lot of other folks that, are investing at early stage funds say, I think you had my friend Alol, who's at Gradient as well, on the
mhm,
podcast, like people that are also doing early stage seed, pre-seed, series A investments, kind of being able to follow on or co-lead deals together, like just catching up. So a lot of it's inbound referral based kind of introductions of portfolio companies or active deals that other folks are looking at as well and collaborating together. And then on the other side, I'd say outbound is a lot of, I have a team of four kind of junior partners that are really out there sourcing on the ground. They go to like UC Berkeley Skydeck, or they'll go to like Stanford's campus to meet with a lot of student founders. They go to YC. They're also compiling like sector studies. So we'll do a sector study on, say, healthcare billing, or a sector study on tax software, for example, and kind of coming up with a list of like what are the top 5 or 10 companies that are at
mhm,
the right stage that we want to go and meet and source, opportunities to like work together with these founders, right?
mhm,
So I would say half of our deal flow is very much outbound focused, where we are trying to find the best companies and founders before they get discovered and try to build that relationship very, very early on. And then hopefully we track them over some period of time, whether it's 3 months, 6 months, a year, or even longer than that, so that we get enough conviction, we get to know the person, where we want, we feel like we're ready to really underwrite that investment in that founder, right? So I
mhm,
think that's like the combination of, I would say, the sourcing mechanism we use today at Mangusta. Um, and then I think your question on how to win deals. So for us, I would say there's really 2 or 3 key things that make us unique as a platform. The first one is really the Luxottica ecosystem. And so Luxottica is the largest eyewear business in the world,
mhm,
where, we own Ray-Bans, or the company owns Ray-Bans, Oliver Peoples, Persol, and also produces eyewear almost exclusively for many of the largest consumer brands globally. So it's a $140 billion publicly traded business, which is funny because a lot of people have never heard of Luxottica as a business. Even LPs that I talk to, other VCs that I talk to, and it's a testament. It's a good thing to stay kind of under the radar when you have such a dominant market share of such a interesting, lucrative market, right? Um,
mhm,
and so the family office itself owns a significant portion of Luxottica, which is a global business that we can help potentially find ways for our portfolio companies to get connected into, and they can be a customer to our portfolio companies. And the
mhm,
other aspect is the family office also owns 10 or so operating businesses throughout Europe, doing everything from water production to steel manufacturing to restaurants, to real estate and other kind of consumer goods. And so being able to leverage their network and their portfolio of assets as well, and helping them see value in adopting a lot of technology AI solutions of our portfolio companies is another very strategic way that we help our companies expand
mhm,
potentially internationally and get new revenues, new customers. And so I would say we're quite a strategic investor in that sense, where we can plug in immediately and drive value day one.
mhm,
That's one of the examples that I like to bring up, is that there's a company that's still in stealth right now, but we were able to get into the seed round last week. Actually, we closed the seed. It was led by Lightspeed and Kleiner Perkins. It's a supply chain AI business that, though the co-leads, that they were going to take the whole round. No other investors in the round. But I knew the founder from my time at SoftBank, and I told him all the strategic value add that we can have with Mangusta. And he basically went to the leads and said, "Hey, I need to carve out some allocation for Kevin and Mangusta." And so we were able to invest in the round because of that value we were able to show. So I think that's a very unique way that we can win deals. The other, I would say, key thing that I think is pretty unique about our platform, my background is, I spent almost 10 years at the Vision Fund, which is a very late stage growth equity vehicle, right? And then over that time, I built a very strong growth network. And most early stage VCs, I would say, don't have that strong of a like super late stage growth investor
Mhm.
network. And so being able to take that forward and introduce my founders to later stage investors like Series A, Series B, Series C investors that are very interested in the stuff that I'm investing in is actually very powerful for them, right? Not a lot of early stage VCs are going to give them that support when it comes to fundraising down the line. And so that's another way that I've actually won a number of deals, is just the strength of the ability for me to help them strategically think through their decisions, but also fundraise down the line. So I'd say those are the kind of the two key aspects that allow us to win a lot of deals as our platform kind of evolves. But frankly, I would say like VC is a relationship, and it's a people business, right? Like people want to work with people that they trust, that they like, they get along with. And ultimately, like for me, one of the things that I really care deeply about is building genuine, strong relationships with people. Like I really don't like it when it's just transactional. It's like, hey, I'm raising a round. It's 1 week. Are you in or you're out? I've never met you before. Like ultimately, it's like we want to build a network of people around us that we really believe in, we trust, and we think are really interesting to work with. And likewise, they feel the same about us, right? And so
Mhm.
that's just something that I'm always cultivating. And for me, it's like I think my reputation in the market and people who have heard of me and know me, like, is something very valuable too. And I think
Mhm.
it's something that every VC needs to like think about, is like when someone asks about, oh, hey, do you know Kevin? What do you think of the firm, or what do you think of him? Like that's also going to be something important that people are going to use to decide who they want to work with.
For sure. I wonder, when you were thinking about like, I guess like portfolio construction, uh, maybe you could give us like a little bit background, like how I know that you guys are primarily invested in seed or earlier stage right now, but like, based off your portfolio, a lot of your companies are in the more towards like later stage. Maybe that was like the Softbank era, but like I guess like how do you think about the different, I guess, like portfolio construction, font size, and then check size, and then how frequently do you deploy capital? Because since I feel like um
Mhm.
Mangusta sounds like it's like a solo LP
So like
fund or
GP or LP?
LP. Because like I mean you mentioned it's like the
Yeah.
eyewear family, right? So like how do you think about, I guess, like, is this like for example, some funds are backed by one LP, like we just talked about Gradient, right? So like then
Mhm.
like they don't have to like go out fundraise all the
That's
time,
true.
like, but
Yeah.
do you have to fundraise from the same family office or how does it work?
Yeah, absolutely. Good question. So let's back up basically to, I guess, the structure and the team.
Mhm,
So we are completely independent from the family office and from
mhm,
Luxottica. So there's no business relationship outside of the fact that the family office is a very significant LP.
mhm,
And the way that we operate is a little bit more is very much like a traditional VC firm. So we are
mhm,
raising external capital. We actually have a portion. We're actually having our second close in May, so we'll likely have new LPs coming in, which will diversify the LP base. And the goal is really to build a more traditional fund structure over time, where we have a diversified LP base of institutional investors, family offices, etc. And so that's really at a high level, the structure. The team in general, I do operate a little bit more like a solo GP style. So while I do have two other passive minority kind of GPs from a kind of ownership perspective, and they provide a lot of support. I'm really the one driving a lot of the day-to-day sourcing, diligence, execution of deals, and operational decisions. And frankly, that's the way I think is actually very advantageous, because I can move quicker, I can build these relationships, I'm able to really centralize a lot of the process and relationships that we have at the firm.
Mhm.
And so that's really the way that we kind of operate.
Mhm.
And ultimately, we want to be able to build this into a long-term platform.
Mhm.
The firm that kind of comes to mind when people ask me like, what do you want to be in like 10 years or whatever, what do you want to be when you grow up, I think is like Benchmark is kind of
Mhm.
like the gold standard for how I think about things, where you know a reasonable size for the strategy you want to pursue, but everyone regards it as strong returns, kind of focusing on delivering performance consistently, not playing necessarily the AUM game. And then it also makes your life easier when it comes to fundraising, because it's like the fund size is only going to be this size. Either you're in, you're out, you either get some allocation or not. And I don't have to, hopefully down the line, you don't have to beat around the bush, like, knocking on doors to try to raise as much capital as you can. Right. So I
Mhm.
think it's a model that I would aspire to. Um, and I think, from portfolio construction perspective, so we have, from the overall kind of fund size that we're targeting, we'll probably do about 30 investments in the portfolio. We'll do, first checks, kind of $1 million or $2 million seed is kind of where we would like to play. And then we want to reserve at least half the fund to double down into follow-ons. So we'll do Series A, Series B, Series C, kind of follow-ons to continue getting more exposure to our top companies. And so that's really where we continue to double down into the winners and generate more alpha even as they get to the growth stage.
Mhm.
So I think it's important for us to make sure that we have reserves for those. So overall, that's kind of the portfolio construction. I would say we can lead or follow. I would say, I sat on 12 boards when I was at SoftBank. It was a lot of time spent going to board meetings. And, oftentimes if you don't have a real strategic angle to how you can really support a business, I just don't think it's necessarily right for you to necessarily take a board seat. And it's also not a good use of your time. And so for us, we'll probably lead about a third of the companies in the portfolio, and then we'll aim to follow for the rest. And so where we think we have a strategic angle or real plug into the company, we'll lead those deals. Otherwise, more of a follower kind of check, but a significant follower.
Mm. I wonder, so like, I mean, what's the size that you're shooting for your fund? And since like we're talking about first close, second close, like, how do you like, I guess like separate, like, is the first close have to be like 50% up or like 30% of the fund that close can be called first close? And
Mhm.
how many close can it be? Like, yeah.
Interesting. Yeah, yeah.
Your
No,
your
no, no.
fund must be really big, so, like, you can do these, like, first, second close. I
Yeah.
mean, most people just first close and then the end.
Yeah,
Yeah.
yeah, yeah, yeah. No, no, no. It's a good question. It's a very good question. So I think the larger funds will go through multiple closings,
Mhm.
and I guess it has been kind of more of a trend, I guess, for folks to go through multiple closings. I would say I don't think there's rules around this, and I'm certainly not the expert on this, so take whatever I say with a grain of salt. But I don't think there's any number of closing, like there's not a limit. I would say most people probably try not to do maybe more than like 4 or 5. Otherwise, I feel like it gets a little bit strenuous. But it's really to like set intermediate like timelines, right? Where it's like,
Mhm.
hey, setting some sort of deadline for the next close, and it'll be hopefully a decent chunk of capital that'll be coming
Mhm.
in. For us, we did our first close with the anchor investor. So it was about $50 million, which, for us will probably be about half the fund or so.
Mhm.
And so our target is around 100, somewhere around there, plus minus. And the goal is to really build out a diversified LP base, right? So I would
Mhm.
say every 10 to 20 million, we'll probably end up doing like an intermediate close. And it's just a way to kind of segment, set deadlines for folks to kind of keep moving along. Um, but there's really I don't think there's rules around it. Like I've seen people do like first closes with a much smaller portion of the fund committed, say like 20% or something. I'm sure I've seen people do like first closings or just like a final closing when they've already
Mhm.
got everything kind of lined up.
Mhm.
So I don't think there's any real rule to it.
Totally. Okay, so I wonder, like you said, I feel like there's no FOMO for LPs to like help you close your fund. Not like you're in particular. I'm just saying as a general observations, like the LP they would take their time because there's no urgency to stuff. Like, and then I feel like setting up a deadline is like definitely really important. How do you think about like differentiation? Just because I feel like they would like I mean like a lot of like LP on our show would ask like, hey, so basically they would say like you categorize people into different bracket. Obviously, you are like a set. Well, I would say you're like a second time managers. And okay, so another like a lot of like people are asking questions, and we'll address them in the end. Okay, so going back to the LP perspective, like they may just like categorize people into different categories for you. Maybe it's like a second time fund manager slash like big fund spin-off, right? So like, I mean, how do you think about building up the differentiation among like, 500 other AI driven seed fruit.
Yeah. No, no, it's a good question. It's a very good question. I think it goes back to like those three things
Mhm,
that I talked about, right? Is like how do you
mhm,
win deals? How do you source deals in a
mhm,
unique way? And that's really what makes hopefully the differentiation from an investment perspective, where like if it's an LP that's purely interested in just performance and financial returns and your kind of investing acumen, like
mhm,
I think those are the things that I talked about, like the Luxottica ecosystem, the ability for the family office to help us win deals.
mhm,
We've got my kind of growth background and network there, and then I think the third thing, so winning the best deals and selecting the best deals and having a disciplined, I would say, investment philosophy. You know, I talk about my background is
mhm,
it's a little bit different from a lot of early stage VCs, right? For me,
mhm,
I'm very focused on what I call the four M's as my
mhm,
investment philosophy, like Mangusta. So first M is market, model, management, money. And the way that I think about those four things is like
mhm,
market is how large the market, how attractive is it, how is it growing, is it fragmented, is it really competitive? Model is the business model. What do the revenue growth look like? What do the margins look like? How's the cash flow needs? What the unit economics look like? Looking at the income statement and the P&L and L and trying to understand that. The third is management. So how does management kind of build the business, and are they really serial entrepreneurs? Have they had experience? Are they super hungry? Are they ambitious? Really judging how hungry, and is this a management team like a moneymaker? Is this founder someone that you really want to fall in love with, and you think that they're going to do whatever it takes to be successful, right? And then the fourth one is money, which is what are the terms of the deal? What's
mhm,
the valuation? Who are the other co-investors? Have they, is the valuation reasonable? What's the multiple? Are the existing investors doing their pro rata or not? So all those aspects that like kind of give you context around the deals on the table is very interesting as well. So
mhm,
those are the things that when it comes to deal selection, founder selection, are the things that I really look for, which is also I think very important. Is like, do you trust the judgment? Someone can source and win the best deals, but are they like, do you trust their judgment on actually underwriting and finding and selecting the best deals, right?
mhm,
And so I think that's all the things that kind of come together, where it's like, do you trust someone on an investment perspective, and do they have some unique mousetrap or strategy that the LPs are like, okay, this is something unique that I want to get in on, and I think they're going to be successful, right? So I think that's one big aspect of it. I think
mhm,
the other, just as important aspect of really fundraising and building these LP relationships is actually just the relationship element of it. And what does the LP care about? Like, we talk to a lot of family offices. That's probably the core actually LP profile that we have been talking to over the last kind of few months. And you'd be surprised, but a lot of the family offices are not just purely financially motivated. They actually care a lot about education, right? They're new to like VC. They haven't done a lot of startups or AI before, or they're hearing about AI and they're like, how is it going to transform my core industrial business or my manufacturing business? And so for them, there's often more of a education element, a strategic element, and a relationship element, that they care about getting to know you as a person, and who, do they trust you? Do they like you? Do they want to spend time with you? Because that's ultimately what they're also betting on, is like
Mhm.
you as a person and as a manager, right? So I think that aspect is also something very important that we focus on as a firm, because we find that a lot of the larger funds, established managers, and even other emerging managers don't really take the time to actually get to know their LPs super well, develop like a personal one-on-one relationship. I tell all my LPs, like, you can text me, you can call me anytime you want. I'll usually pick up the phone, and if there's ever any questions that come up, like, you have my WhatsApp. And they really do, right? Like, they ping me anytime they have something that comes up, they have a question, they see an interesting news article, deal. Like, I want to have that personal relationship, because I can, because our fund is not, multi-billion dollar, right? For a lot of the big platforms in Silicon Valley, they just can't do that. And so that's another reason why I think um, we're very attractive to a lot of LPs, because they get that personalized kind of white glove service that they wouldn't get elsewhere. And we can deliver that, because we're not going to have a lot of LPs in the fund anyway.
Mm. I love that. And I wonder, so like maybe since we're like on the topic of LPs, by the way, like people are like loving the conversation. Hi, Chow Wiki will address your question and Ayush and LinkedIn user and Joel. So like I just wanted to like literally quickly say hi to all the audience who comments. But and then I wonder like maybe since we're on the topic of LPs, like how do you build like a good LP network? Just because I feel like a lot of the even for the big fund spin-off GPs, like not everyone's like interacting with LPs and their prayer fund. And then also like when you are raising a new fund, it's like a very different set of LPs than like, the established like 1,000 years fund, right? So like
Mhm.
I wonder how do you think about like building up your own like LP base and then how do you really vet when people are let's say like a family office or like I mean like an endowment you don't have to vet because it's not like they're there, right? So how do you thinking about like qualifying your LPs that's like making sure that they're like on board with what you are trying to do? And also like I feel like a lot of LPs may not really understand the concept of venture capital. Like the returns is very high, but the risk is also really high. Like how do you kind of like prep them mentally to be like actually understand the concept of this? And then since you mentioned about like the education component, like do you host like a webinar or like or you just like take let's say the tax from like an LP to be like, let's call upon a call to talk about XYZ or like how do you kind of like help them with education to like make sure that they understand like what's going on in the AI universe, but on the other hand, also like will convert into LP. Like I've heard of a lot of emerging manager, they would take like, 5,000 these like consulting calls, but like never result into anything. But what's your kind of like thought process behind like
Yeah.
actually converting it into like a client?
Yeah. No. It's a good question. So, lot of questions. So maybe I'll
Mhm,
try to break it down in a couple of different sections.
mhm,
But I would say, at a high level, just like personally, I never had to do fundraising when I was at SoftBank, right? We had basically, I mean, we had the first
mhm,
vision fund, which $100 billion available for us to invest basically right away. So I never had to be involved with that. And then after the first vision fund, we were investing off the balance sheet.
mhm,
And we had hundreds of billions of dollars to invest off the balance sheet as well. So it was a very fortunate scenario where I didn't have to do fundraising. And
mhm,
so it was a good thing, but also unfortunately a bad thing, because I didn't have the network of LPs when I left to do my own thing. I didn't have those relationships that a lot of other folks that may be at a VC fund that does have LPs at a certain point in their career, junior partner, maybe when they get to be a GP, they will have those relationships. They start getting introduced to the LPs, right?
mhm,
And they start to manage that process. And so they have those LP relationships when they actually leave. And so that's a huge advantage, because you can just continue the conversation. They
mhm,
recognize your track record, and they got to know you when you were at XYZ fund before. um, and so that was one of the things that I just really had to overcome when I left SoftBank, is
mhm,
essentially building a lot of this from scratch. And, there's a couple of different, strategies and tactics that I obviously have had to learn and to implement over the last few months as I've started on this kind of fundraising journey.
Mhm,
But I think obviously, one of the most important things is just like meeting people in person as much as you can. I
mhm,
think people at the end of the day, we're social creatures. We, we find more, I would say, meaning in meeting people in person. And so for me, I do travel quite a bit. So I've been in Singapore, I've been in Korea, I've been in New York, Miami, in Europe, and, London, Monaco, Milan. I went to Dubai, Abu Dhabi, Saudi. Like, people always say like, "Oh my gosh, you're always on the road." Yeah, because ultimately that is
mhm,
how people really connect. And so I do a lot of in person because I think that results in more meaningful, stronger relationships. And it's also easier to read someone's reaction of whether they seem interested or not interested in
mhm,
something when you're actually in person. Um, and so I think that's one key aspect of it. I think like communication, education, and community building is all a very key part of our platform as well. As I was talking about earlier, like I want to have that one-on-one relationship with everyone.
mhm,
And how do you do that? It's through all those things. It's like
mhm.
education. So we do like a weekly newsletter, which talks about the latest AI news. Maybe I'll add you to the newsletter as well. You can kind of start to
Please.
see that. But
Mhm,
we do like a write up every week about what's the latest developments in AI. We'll do when defense tech is a big topic as well. So we have like a kind of a digest that we'll send out this week on that. And so it's like something that I never used before, but MailChimp,
mhm,
I'm sure, or
mhm,
Beehive, there's a bunch of different platforms like I'm sure you're familiar with, like having to get used to using that as a
mhm,
way to communicate with a larger audience.
mhm,
And then for the LPs that are really interested, ultimately, I think to your question, how do you qualify them and how do you know they're real and are they interested? It's funny, fundraising and LPs is kind of like it's dating, it's
mhm,
obviously I want to get LPs into the fund, but they also have to be interested in the fund and what we're doing and my background and everything, right? So it's a two-way street. Like you can't, I think fundraising is something that you cannot hard sell someone into. Like they have to want it. They have to be interested in VC. They like what strategy, what you're doing. They like you, they like your track record. They like the platform you built, and everything about it, right? And at the end of the day, in some ways, they kind of actually have to approach me as well, right? I
mhm,
go out there, I say, here's what we're doing. Nice to connect. Here's my contact info. Happy to catch up. And so, like, I'll do Zoom calls every whatever it is, month or 2 months with a lot of the LPs that I'm talking to that seem quite engaged. And then at the end of the day, I ask them, hey, what's your process? Is this interesting? Do you want to kind of continue engaging? And they have to opt in, right? They have to also say, hey, we are ready to go. We want to do this. And we want to take it to the next step. And
mhm,
then from there, it's like go through their process, right? Like
mhm,
whatever, if it's a more institutional firm, they probably have like an IC process where they're going to continue to, need to dig into your data room and collect a bunch of documents.
mhm,
And then if it's a family office, oftentimes it's like elevating it to their quote IC, might be a family
mhm,
member, whoever it is, meeting with them, meeting in person, spending time over a meal, or setting up another Zoom call. So it's like continuing to elevate the progress and the process of that conversation, which does require both sides to buy in, and for the other side, for the LP to be really interested as well. And then if your question was more like, how do you know they're a legit family office? Part of it's like, okay, doing a bit of research online, asking people, have you heard of this family office or not? And then KYC process as well to check like it's a real person, real, they have ID and it's all not like a,
I
fake LP, which believe it or not happens more often than you would expect.
mhm,
So that's another thing that, for a lot of the emerging managers in the community, like we talk about, hey, like watch out for this or watch out for that. Like it actually does happen from time to time.
for sure. How do you like okay, so the audience are going strong. Like people are coming from like literally besides LinkedIn, there's like people coming from like YouTube and a Facebook. So like so people are asking what is a newsletter?
So
Just
it's
ask
basically
anyway.
like an email.
Oh,
It's
I'm
like an,
sure. Like, I don't think they're asking what is a newsletter.
oh.
They're asking what is your newsletter called.
Oh yeah, yeah. So it's called Mangusta Insights, and so we send it every week. I can try to find the
Maybe you
link
can
for.
link it to like the
Yeah,
comments or something. Like, I'll
yeah,
link it to
yeah.
the comments.
Absolutely. Yeah, I'll send.
Yeah.
I'll put the link here. So like, if anyone wants to sign up, you can definitely sign up for it. But it's pretty. Yeah, it's great because we're able to really reach. I think we have almost 5,000 people on the
Mhm.
newsletter. So it's like a combination of everything from investors, founders, other like LPs that are interested. Sorry, I'm trying to find my.
Yeah.
Oh, here it is.
Kat also asked, thank you, Grace. This is very cool. What is the name? How to subscribe? And then I'm sure like Kevin will link it. And
Yeah,
it's from
I don't
Mangusta
think I
Insight.
can post.
Oh yeah, like you can send it to me and then I'll post later
Okay.
because I think
Yeah.
both of us, neither of us can actually comment.
Oh,
Um,
interesting.
yeah,
Okay.
like so during live stream, so like they don't allow us to comment, but like I'll like share this link to the first comment.
Okay. I
I
sent it
don't
in
think
private chat, so
yeah,
I
I
think
saw it. Yeah.
okay.
I'll like I'm putting this in like my notes and then like I'll put it in the show notes slash the comment.
Awesome. Awesome. Yeah,
Awesome.
I encourage everyone to sign up if you're
Yeah,
interested.
for sure. I'll personally please just add me to the newsletter. I better see this podcast episode also end up in the newsletter. But anyway, just heart plug here. Just kidding.
Yeah. Yeah,
Um,
yeah.
okay. So I wonder, so like I feel like maybe we could talk about it from the deal side because like one piggyback question on the LP side, like how do you love this? You already posted here.
Yeah,
Amazing.
somehow I was able to I don't
Post
know, I have like a billion
love.
tabs open.
Yeah. Wait, I have a question on like, so when you were mentioning about like LP, like I guess like how long do you have to talk to them? So for example, let's say like is that 4 months too long? Or like since like as an investor, you would take let's call it like 3 to 6 months or like even a year to like invest in a company. But the fund is like even more serious or like bigger checks or more
Mm,
serious basically in general. How do you think about like the process of like it how long does it take to close like an anchor LP? And how
mm,
long does it take to like because I feel like anchor is probably the hardest as everyone's mentioning like the anchor have to be your BFF or your uncle or like someone that you have a
mhm.
relationship with since like kindergarten. Um but like not everybody knows that. But like I guess like how do you think about like or like maybe even after the anchor like how long does it take to like close the second person? Like is there like a general timeline for everybody or like is this like everyone just like go as it like because like
Yeah.
it's
I mean,
impossible to create FOMO too.
yeah, it's honestly it's really hard to say there's a rule for that. It's
Mhm,
kind of all over the place. I would say so for example, my anchor investor I've known for almost 3 years,
mhm,
and it was just I was introduced by a SoftBank colleague of mine who
mhm,
had actually worked with the family on a couple of other previous deals together, and they had a really good relationship. And then I started kind of helping them out and advising them as well on investments, like XAI, OpenAI were some of the deals that we actually looked at and did together. And so it was just kind of organically built over a number of years where they develop enough trust and relationship where and of course I went to meet them multiple times in person because I think ultimately that's like it's funny, but it's like, during COVID, we were all on Zooms, but really, like, I do think the way that business is done and still will continue to be done is substantially in person as well.
mhm,
So, anyways, built a very good relationship with them. So it took, call it 2 to 3 years to get that anchor.
mhm,
But I would actually segment it based on like the type of LP that they are, right? I think the ones that we are familiar with, it's like the endowments, the pensions, like the Harvard, the Yale, the Princetons, the Stanfords of the world, they are tracking managers over a very, very, very long period of time, right? They typically don't invest in fund ones and fund twos.
mhm,
They're probably tracking people over fund three, four, five. And so that ends up being, anywhere from 5 to probably 10 years that they're
mhm,
tracking someone's performance, what they've been able to do, the platform. until they get to a point where, okay, you have everything, you
Mhm.
kind of checked all the boxes, at least on like the institutional requirements of what's needed, and hopefully they believe that you're going to make great investments and continue strong performance. And so that's kind of like the extreme end of the longest, perhaps, decision making um, kind of timeline. I would
Mhm.
say as you look at other different types of institutional investors, some of them can move a little bit faster, right? So there's a lot of fund of funds that cater to like emerging managers, or like accelerators, or even just frankly family offices,
Mhm.
where they're kind of institutional. So they're a little bit, they've been around for a while. They have whatever over $2 billion of capital, and they're really, have this fund to fund strategy that they're familiar with. But for them, maybe they want to track for perhaps a year, 6 months, a year, maybe 2 years. And so it's a little bit shorter time frame for those. They're maybe more open to first time managers, or first time funds, or like fund twos, or established managers that have institutional track record but starting their first fund. And so there it's like a little bit more flexibility, a little bit faster, maybe 6 months to a year and a half or 2 years. And then on the very, very short end of the spectrum, you've got like smaller family offices, high net worth individuals, or angel investors, right? So it could be like a previously exited founder who's, made a lot of money from whatever. Maybe they were previous co-founder of like Stripe, or Scale, or whatever it is. And they started doing angel investments. They want to invest in some funds. They'll throw in $1 million check or $2 million check here or there. you know, when it comes to like the individual level and less formalized family offices, they can move at whatever speed, right, that they want to, right? It's usually single decision maker, or maybe, one layer up, but like very, very like small hierarchy. So it's a fast process. They aren't going to dig through every single document and ask for, send like a 10-page due diligence questionnaire with everything in it. Like it'll be probably a bit more streamlined process. And so those checks are typically smaller, but also the timeline is faster. So you may be able to get them signed up in, I don't know, somewhere between 1 to 6 months, which
Mhm.
is a lot faster than I would say the other kind of profiles that I've mentioned, right? So it really depends. And the benefit of those later stage kind of institutional LPs is that once they finish their process, it's a huge stamp of approval. Oh, I think I lost Grace. Oh, hey,
Happen.
I think I lost you for like 2 seconds.
Oh no, what is happening?
No
Oh no.
worries. No
Okay.
worries. We can't lose the host. We can't lose the host.
No, did I click on something wrong or what's
I,
happening?
who knows? But you're back now. So
Okay, perfect. Yeah, yeah, yeah. Okay,
yeah, yeah.
awesome. Okay,
Uh,
we're talking about. I was like rapidly taking notes. We're talking like okay, basically 1 to 6 months is a
yeah.
family office. That's like the last part I took notes on.
Yeah, yeah, yeah. And I would say like the institutional, on like the later stage institutional, the benefit of
Mhm,
those, even though they move slower, is that they'll
mhm,
stay with you for a very long period of time, right? So if they
mhm,
commit to your fund, they will likely look at your successive funds. And in the
mhm,
past, it was more likely that they would recommit to your new funds. I know
mhm,
that in today's atmosphere, there's a lot of institutional LPs that are reconsidering their re-ups into existing
mhm,
portfolio funds that they have. But in the past, it was very sticky capital. So if you got them once, you would hopefully get them over many, many future funds, and they can write large
mhm.
checks, right? Usually more sizable than individuals or smaller family offices.
For sure. I wanted to like okay, so one last question and then I'll jump into audience question. I was trying to find audience question through the comments because like I think it's on both of our live stream. So one question is about uh, for example, like the XAI, right? So so basically I'm hearing a couple of things. One thing is like build track record with the LP. So like maybe it's through investing instead of just through like, I don't know, like building a relationship by like getting coffee or something. Um, hi Melanie. So like basically I wonder how do you think about like, for example, getting into a deal like XAI because, like, I think, like, that's, like, some of the hottest deals or, like, OpenAI, right? So how do you think about the value add for them? Obviously, you can add value by, like, being I guess like introduce them to a later stage investor. But like for XAI, like do you really need that? Because it's like Elon Musk single-handedly, I
Yeah,
don't know,
yeah,
doing
yeah.
everything. So like how do you get into deals like that's ultra
Yeah.
competitive?
Yeah. Yeah, yeah, yeah. And I gotta give a shout out to Melanie as well. She's a very close friend. We were
Mhm,
actually hanging out yesterday night
mhm,
with Baron Davis, who's a former NBA star at the
mhm,
Warrior at the Chase Stadium, and he's doing a lot of great VC stuff too. If you guys
mhm.
want to check him out, but yeah, to your question on like what kind of stuff. Also, I should shout out. We are going to do an event. Sorry, it just reminded me. We're going to do an event at the. Have you heard of the AGI House? You should have someone from.
Yeah, no, yeah, like so the Agile House founder went to my summit 2 weeks ago.
Okay.
Yeah. So I had like my first conference, like my first like venture AI conference 2 weeks ago in SF.
Hmm. Yeah.
You were invited for the next one, of course.
Yes.
Yeah,
Would
yeah.
love
And
to.
then he was like one of our speakers. Yeah, he's a longtime friend since like probably like 2015.
Awesome,
Like
awesome.
one of
Yeah,
the
yeah.
conferences.
Yeah, so we're collaborating with AGI House, Rocky from AGI House, and Gold House, who actually, I'm sure you know a lot of folks at
Daniel?
Gold House too. Oscar, so we know Oscar, who's helping put on an event with us, and hopefully we'll get Baron Davis and a couple other really high end, kind of really cool celebrities as well to kind of bring. And Melanie is obviously co-hosting as well. She runs a super cool podcast called Icons as well, and we're going to bring in like a lot of celebrities, AI, kind of a little bit of a different kind of tilt to a typical kind of Silicon Valley VC event.
Mhm.
So would love to have you there as well, Grace.
Yeah. Invited
um,
on the show.
yeah, yeah, yeah. And so I guess to your question, like in terms of like these really really hot deals, how do you kind of source and get access? So I think it's less of like winning the deal as in like, oh, I can add value to you in that sense, but much more like, do you have access and relationships to kind of the inner circles of
Mhm,
either the VCs or the key founders and their ecosystem, right? So like Elon obviously has his own family office.
mhm,
You can look up kind of like the folks that are involved with it, but it's like there's a guy who actually runs it, and they have relationships with a number of key kind of firms throughout Silicon Valley, right? Obviously he's part of kind of the PayPal mafia, so like Peter Thiel and many of his kind of funds, like founder funds and other kind of vehicles, are involved. And so it's really being able to get access to and having relationships with other really key ecosystem partners to that company. Same thing with like Anthropic, same thing with like OpenAI. So for example, like Anthropic, two of the actual SoftBank Vision Fund colleagues of mine went to join Anthropic. So one of them is leading, kind of finance and strategy. And so there's a just like it's a small community, but like being able to know folks there, it's like if I could text them and be like,
mhm,
hey, I heard that Anthropic's raising, like, can I get in? You guys are doing a secondary. Is there an
mhm,
opportunity for us to invest? So like
mhm,
that's really the way that you kind of have to make your inroads through that avenue, because otherwise it's actually quite hard to otherwise source allocation to these
mhm,
really really hot deals, right? Unless you want to go through an SPV where it's just a little bit less clear, the provenance of the shares. Do you trust who's running the SPVs? How many layers is it? And we've seen a lot of that kind of coming to blow up actually in the last few years, as VC has become such a hot topic. And
mhm,
it's also quite dangerous because you're seeing a lot of people that probably aren't very well versed in VC,
mhm,
oftentimes getting into these vehicles or even getting scammed when they don't know how these things work, right? So it's
mhm.
just something to be very careful about.
Yeah, I literally I was talking to like two emerging manager. They're running a secondary fund, and they were talking about like how scammy SPV could be. Like you never really know the source. The source maybe like not be the like just like there's a lot of like um different layers of like I wouldn't say scam, but like it's more of like I don't even know what's the word, but it's just like people accidentally got into SPVs that are like actually are not on the cap table or like having some sort of issue.
Yeah.
But I guess like how do you like so for example for like an OpenAI or like a Anthropic, do you have a get in for us like literally when they were raising, or is it more of like a secondary? And then if it's secondary, like how do you Is there any rules for secondaries, or like you just like if you know the owner of the secondary and then you just like purchase a portion of it and the transact like you are on the cap table immediately?
Yeah, yeah. So for XAI, for example, like we were part of the original primary round that was
Mhm.
raised over a year ago, actually. So the first Series B, so the first institutional capital that they raised, it was at a $24 billion valuation. We were early investors from the family office side on the balance sheet into the that specific primary round. And then we eventually transferred it into the fund. So from the family office balance sheet into the fund.
Mhm.
Um,
Like where you warehouse your own deal.
yes. Yeah, yeah, exactly. Exactly. Because we hadn't done the first close yet because we
Mhm.
did the first close last July. And so there was a period of time before we were finalizing like the paperwork where
Mhm.
like, okay, this is a really cool deal. Obviously, it's like live. You have to decide whether you're in or you're out. And so we're like, we should do this, and we're very glad that we did because now it's as of the latest valuation, I think it's like 120, at least that's been reported in the news. We're up 5x from where we invested, and so
Wow.
it's been a
Crazy.
pretty within like a year 5x return is pretty good, I would say, and I
Mhm.
think there's still more opportunity to continue to hopefully appreciate. But it's really like for us, we like to be part of those primary rounds because you'll get preferred shares as opposed to sometimes when you're buying secondary, it can be common stock, which is more junior to like preferred stock. And you know that there's like someone that's pricing the round that's hopefully pretty
Mhm.
reputable, like a Sequoia or Fidelity or whoever. So like you know that like the pricing of the round is accurate as opposed to like secondary. Even secondary markets, sometimes they're liquid, sometimes they're not. The pricing can be not entirely accurate all the time. So for us, we're very glad we were able to do that. I will say that we opportunistically will look at secondary if it's a company that we've known for a very long period of time or a founder that we've known for a while, where we also have comfort with where it's being priced. And it's hard, for example, to get like primary allocation, or the company may not go out to raise a round again. We will be open to, or if we know that we can get a discount on secondary as well,
Mhm.
right? So
Mhm.
we will opportunistically look at that. And it is a direct, usually the way I've seen secondary setup is just a direct transfer. So we
Mhm.
just buy directly from whoever it is, whether it's an employee or an early angel investor. And essentially they transfer us the shares, we transfer the cash, and essentially our name goes on the cap table instead of their name. So
Mhm.
those are pretty straightforward. I again am very cautious about getting into SPVs where we don't know who's if the SPV sits on the cap table, maybe that's okay. But if you don't own the actual shares, that's something that I'm always a little bit cautious about.
For sure. What's your thought on like liquidation? Because like obviously, I feel like 5x within 1 year. That's like super impressive. But like
Mhm,
sometimes I'm just thinking about like I'm sure the family office probably don't want to sell like next year or something. But like let's say if an actual crazy event happened, I'm not
mhm,
talking about like this particular deal, just like any deal that you got in. Like, what if let's say yeah, some accident happened or some policy issue or like some random stuff happened. How do you liquidate some of the bets that are like so bold?
mhm.
Just because it's like, I feel like a lot of times it's just like a overnight. Like going through the crypto era, like as you can tell, like I feel like a lot of companies that are very volatile. Like, so it's like you could literally cancel an industry within one night. So how
Yeah.
do you think about, like, the crazy stuff
Yeah.
happen? How do you, like, liquidate some, like, really big bets?
Yeah, yeah. So the other aspect of where I bring my prior background to VC is like working at a hedge fund and doing public markets investing is very different in many ways than, a very illiquid investing style like VC.
Mhm,
But one thing I actually do take from my time there is in public markets, when something is appreciating closer, higher and higher to your target price, you actually sell part of your position as you get closer and closer to that target price. And when you
mm,
reach the target price, theoretically, you would sell all of it, right? And
Mhm.
then same thing is like if something goes lower, but you still have conviction in the stock, you typically actually buy up more because you're like, oh, it's on sale. I think that it's
Mhm.
actually gonna more than appreciate back up. So I
Mhm.
want to double down and get more, shares at a cheaper price. And
Mhm.
so that's actually a way that I want to view venture investing as well, which most VCs don't do, which is as a company, continues to perform and do very well, you should
Mhm.
take some chips off the table. We for things that are highly liquid, like XAI is extremely liquid. I would say I get pinged basically every 2 days about
Mhm.
someone who wants to buy our shares at a significant premium to where they're trading at to where it's publicly announced the valuation. And we've been holding off so far because we're still technically fundraising and we don't want to send DPI back to our LPs
Mhm.
until we have the final close of the fund. So we make sure that everyone benefits from that. But I actually think that we'll end up taking some chips off the table, maybe selling 10-20% of our position. At least you get your basis back. And then I think we would actually probably be one of the earliest VC funds to ever return DPI back to our investors. And so that's something that, I want to really focus on is actually thinking about liquidity and
Mhm.
exits because VCs are notoriously good at investing in companies, but notoriously bad at exiting companies.
Mhm.
And so that's why I think, it's important to actually, take some chips off the table as the company goes to 5x, 10x, 20x. And it's not like you're taking all the chips off the table. You want to let a lot of it run, but I do think it's a safe kind of good prudent financial management position to take to actually
Mhm.
take some chips off the table.
For sure. I feel like that's such a really good insight on like, like selling before it's like getting its like quote unquote peak. But it's like also really hard to know like when is a peak because like, like you said, like when you are entering the deal, it's already like I guess, like, valued at, like, $24 billion, like,
Yeah.
for n a normie, so it's really hard to imagine that, like, if
Mhm.
FedEx, like, within a year, right? So, like, I think it's really hard, it's like an art and science to, like, actually figure out, like, when to sell. Okay, I wanted to be mindful of the time. Maybe we take one audience question, and then we do, like, a one-minute fire round, if you have time.
Okay. Yeah. Let's do it. Let's do it.
Okay, let's like let me just quickly open the comment section. Okay, what about this? Like so Tom said like, okay, what interesting topics, what industry do you see as most significant opportunities for application layer AI to create tangible impact in the near terms?
Yeah, it's a good question. I actually get that one a lot because people are like,
Mhm.
"Which sector do you think you're most interested in?" Because we
Mhm.
we do vertical AI, right? So we look at
Mhm.
sector specific applications, and honestly, the answer I give is a little bit unsatisfying because I
Mhm.
would say where I see the most opportunity is where it's already the most saturated and competitive of a space today,
Mhm.
which is kind of unfortunate because for us at an earlier stage investing, it's a little bit harder for us to, these are growth stage businesses. So one area, legal tech, I looked at it when I was at SoftBank 3 years ago. I actually brought forward a lot of legal AI businesses to our investment committee. Unfortunately, they were too early stage at the time. They were doing like 10-20 million dollars of revenues, so we didn't make it through investment committee.
Mhm.
But two of the big names that are out there right now are Harvey,
Mhm.
Case Text, both of which I spent a lot of time in when I was at SoftBank. And so legal is certainly one that I think is makes a ton of sense. It's text in,
Mhm.
text out, very natural fit for large language models. But unfortunately, I would say there's so much competition, so much capital that's flowing into it. Sequoia has also kind of king made Harvey into like the de facto winner. And I don't think any of us want to really fight with the war chest of Sequoia either. So legal is one space. The other space that I think is really interesting is coding. So engineering, programming, coding in that space as well. A ton of big companies out there. Codium, which I think recently rebranded, Cognition, Magic.dev, Cursor. You could go on and on. there's a ton of really, really high quality, but also very well funded companies in that space now. So I would say, that's obviously another one that's very, very exciting. And then, for me, it's also about finding maybe players within those fields that have a niche approach or a specific application or piece of the tech stack or application stack where they're better than maybe the larger company in that space. And so we'll still look at stuff in those spaces, but with the hope that maybe if we invest at an early stage, they might get acquired by a Harvey or a Cursor sometime down the road, right? So that's
Mhm.
kind of the way that I think about those spaces. But outside of that, every sector, I have this page in our deck, fundraising deck, that has like 20 different sectors on it. I mean, each of these sectors are like $100 billion, if not $1 trillion markets across like healthcare, across tax, across like industrial manufacturing, agriculture. Like it doesn't really matter what sector you look at. There's going to be such amazing AI application companies coming out of every single sector. And these are all huge sectors. So I'm not worried about the amount of space there is to play. And I don't cherry pick, like, I'm only going to look at legal and coding. Like, I'm going to look at everything. And the team has kind of, segmented and split responsibilities based on all the different sectors we're tracking. And
Mhm.
because we think that there's going to be amazing companies from all of these sectors.
Mm. Amazing. Okay, so I love like I could have like go on and on about like these subjects, but I want to be mindful of your time. Why don't we end with like a quick 1 minute fire round?
Yeah.
What's your favorite book?
Ooh, I would say Never Finished by David Goggins. I'm reading it right now. It's the one that just comes to mind, which is very inspiring.
Who made the biggest impact in your career?
Oh wow. I think it would have to be Masa.
Mm,
Having the opportunity to really learn from him. I used to go to Tokyo like 10 times a year.
mm.
And so it's, the opportunity Softbank has also afforded me is amazing.
Um, maybe like one lesson from Masa since we're
Mm,
there.
a lesson from Masa. Um, I think it's dream big, and never, don't ever think that you can't do something.
Wow. Who would you invite to your dinner party?
Oh wow. Um, it'd be really cool. I think it's very different from VC, but I do think Warren Buffett would be super interesting to spend some time with.
Who would you find? Where can we find you outside work?
I try to play tennis as much as I can, so probably on the tennis court.
Love a good outside sport. Well, Kevin, thank you so much for coming on the show today. It was such a fun conversation, and then you made what you're doing sound so interesting and just like thank you for sharing your thoughts, basically.
No, I appreciate it. Thank you so much for having me on, and I would love to come on again if you'll have me and find ways to collaborate because I have a lot of respect for what you built here. I know a lot of people watch, so exciting to finally be on.
Thank you so much. So I'm super super appreciate you. Okay, let me quickly end stream. Sorry, it's